In this video, traders are going to look at being over-attached to one market. I've been guilty of this, have you? Hey traders and investors, a very warm welcome to you. So, are you guilty of being over-attached to one market? I know I have been guilty of this a few times in my trading career, and I know that it has cost me money. What do I mean? So I mean that, hey, you know what, you're trading one specific market. It could be FTSE futures, DAX futures, a specific stock. It could be this, and it could be investing. You could have invested in a stock, whatever. You've had a bulk of trades over a decent period of time in one specific market. Could be a currency pair, could be any of these things. And you end up holding on to the notion that that market is going to keep on giving indefinitely. And ultimately what happens is the market changes phase, it changes conditions, your strategy doesn't work as well, and in reality, you could have ended up making more money if you moved over to another market. So I'm just going to run through some points and let's talk about this, because this is something that will increase your kind of win rate, or will increase, your growth of your trading account, will increase your kind of learning rate, and hopefully will stop you going through these drawdowns that you can go through if you get stuck on the same market for too long. Okay, so number one, revenge trading. So I wanted to get this out there first because this is a slightly different type of thing. What I mean by being over-attached to a market, I don't mean when someone has traded something and they want to get the money back and they think they have to get it back from that specific stock or market. That's not the same thing that we're talking about here. There's two distinct different kind of feelings. One is, hey, you know what, Apple, I lost money on Apple, I've got to get my money back on Apple, which we know is a fallacy. It doesn't matter where the money comes from, as long as you're making the money. So we're not talking about that. What we're talking about is having a good run on a market and then being over-attached to it after that good run. So we'll start from here. Number two, being good to you. So the market's been good to you. Let's say you've been trading it 6 months, a year, whatever, and you've been trading it every day. For day trading, with swing trading, you know what, you've just been trading feels like a genius. You've been getting the flows, ebbs and flows, your strategies have been working very well. Sure, you've had drawdowns, sure, you've had negative days, but over time you've made some good money. You kind of look at it, you think, you know what, this is great. I've made some great money on this market. I've done very, very well. My strategy's working well. I'm dialing up my size. I'm starting to push more aggressively, and you start to feel attached to that market, and you start to think, you know what, I'm going to continue trading this. I've always traded this. This is where my good fortune has come from. I am defining yourself as I am an oil trader. I am a gold trader. I'm a bund trader. I'm a yen trader. You start to define yourself as that trader. Now, the problem comes in that markets move in phases. Perhaps you've been doing very well over that bull phase or that range bound phase, that bear market. Whatever it is, you've really kind of got into the flow and the nuances of the market, and your strategy has been working well. But ultimately, what happens is that market phase changes to another phase. Maybe it goes from bull to range bound. Maybe it goes from bear to kind of bull, or off the lows, whatever it may be. Well, you and I both know, guys, that markets change phase. And you can look at any currency chart you want, any stock chart you want, and after a period of time, they move into a different type of condition. And so the thing you have is you've been working very, very well in that one condition. When it changes, you start to draw down, or you start to be not as effective, or your strategies don't work as well. You start to be one step behind. Maybe your targets don't quite get hit. Maybe getting stopped a bit more frequently. Regardless of what it is, your equity curve starts to drip lower. So you're in this dilemma. You're like, hey, it's been really good to me. I'm an oil trader. I've always traded this. It's been kind of good to me. I need to stick at it. But the reality is, you shouldn't become over-attached to it. You should identify quickly that, hey, conditions have changed. Let me be objective to this. Look, we're in a completely different environment now. The average true range of the day is different. Something else is driving the whole global macro feeling. Ranges are different. Technology's changed. The game has changed. And so you kind of end up missing the money flow that's gone elsewhere. Perhaps money flow and volatility and the conditions that suit you have now moved to another market. maybe there's a bull market elsewhere, maybe there's a bear market, or whatever conditions were, they will have gone to somewhere else. And so you are better off moving to that market, moving to that basket of stocks, moving to that currency, rather than sticking at this because you've branded yourself as an oil trader, a gold trader, a DAX trader, a tech stock trader, whatever it may be, because you're going to limit your growth. You're going to have the account equity do this, and then when the market changes phase, this is what's going to happen. If you're not careful, you'll get that drawdown. Fine, you get drawdown, you're gonna have to draw down anyway, but at some point you identify, hey, you know what, my strategy is just not as powerful. Then it's time to reassess. It's time to look where the money is flowing. It's time to go elsewhere. You end up with too steep a drawdown if you stick with the same market and you become over attached to it because you think, I'm gonna come back. And you start getting frustrated and this starts happening. And so you undo all of that good work that you might have done in that quarter or whatever it may be because you're trying to force the same strategy that has been working well on a market that's really not conducive to it. So the trick is, guys, is if you're trading a market very, very well now, if you're going through a phase where you just seem to be killing it, you can't do no wrong, or your equity curve is pushing nicely, you've identified one or two markets that are trading very nicely for you, then your strategy doesn't start to work, your equity curve doesn't, which you can see straight away in your equity curve. That's the easy way of doing it. It's not as effective. You're not getting the same kind of growth. Perhaps you're getting smaller growth. You need to reevaluate what you're doing. You need to look at it and say, hey, is the system still applicable to the market conditions? Have the market conditions changed? What do I need to do now? Where should I go? Let me pause. You've made some good progress there. Pause, assess. Do I need to adjust my strategy to trade to a market, or use the strategy that I've got in a market that is better now for that strategy? Whatever you do, don't become over attached to a market. I should probably add to that as well, don't become over attached to a strategy. It's all about, for longevity as a trader, it's about flexibility. If you read books of any of the greats who have been trading for 20, 25 years, 40 years plus, those kind of levels, they have always changed. And you may be watching this saying, hey, I've adapted in my career. I know I have over 15 years. I've changed the styles, I've changed the market conditions belatedly a lot of the time, and then kind of went through this cycle a few times of trying to force stuff onto things. But now recognize that the market the movement doesn't matter. The price is the price. It doesn't matter what that is, a currency pair, a commodity. It's still the same thing we're trading ultimately. It's just supply, demand, auction of a price. So I want to trade the stuff that gives me, with my strategies, the most opportunities, and that's what you should do too. Don't become over attached to a market. Take it and make as much money as you can while it's working for you, and press and press and press. When it stops working, don't be shy to kick it out and look for something else. All right, guys, see you next one. Take care. Bye-bye.